G'day, buddy morners. Hope you didn't bloody miss us too much on Wednesday, but we're back with a bang, and mate, we're getting deep into deep yellow. Raising a bit of bucks today, mate. MinRes Hall Road, good and bad within 2 days. 2 articles.
Drama.
Great
drama.
Might all be bad. Just spun is good.
Mate.
The cynical take.
These bloody AFR journos aren't talking to each other, I don't think. Then you got, mate, SolGold, Spartan. Trav, this is a good little Spartan thing you've got going on. And
Bit of a rant, Matty.
Bit of a rant.
Not happy.
I love a good rant.
Pissed off.
Yes. And Cyprium, I feel neutral about them. So, right, the MinRes. Now, this come out. This has been over the last couple of days. The MinRes Hall Road hiccup and sale update. So, boys, give me the lay of the land. Or do you want me to lay it?
Matty, you can lay the land.
I'll lay it. I'll show you the road.
Yeah, and then we can get into what we think are the incentives behind these articles. I think that's
I forgot I wrote this bit. So first article to mention was Tuesday evening. It was just an AFR article by Peter Kerr and Brad Thompson.
Yeah, if it's Street Talk.
Not a Street Talk.
For Street Talk, it was written by the banker.
Yeah, yeah. So this was written by this was written by them too. It came out about a contract dispute on the 147-kilometre Onslow Hall Road that's been getting plenty of bloody action these days. That is being developed for MinRes for the Onslow Iron Ore project.
Yep.
Apparently, earth-moving company QH&M Burt walked off the job over contract disputes with MinRes. Claims that have arisen that MinRes have not provided an adequate enough amount of raw materials, such as gravel, to build the road, saying it's not enough to handle constant trucks filled with iron ore going over it.
Wow.
And MinRes themselves have now taken over the Hall Road contract in the interim. Looks like they're in discussions to see if they can get these people back on site, but not yet determined. I wish I saw the Burt website a couple of weeks ago, because you look at it now, current projects, Onslow Hall Road was not on there, but I wonder if it was 2 weeks ago. Not sure. Look at trusted clients down the bottom, such as BHP, FMG, Glencore, South 32, Rio Tinto. No MinRes logo to be seen.
Mate.
Yeah, so it doesn't appear they've walked off indefinitely. There might be a chance it can be resolved, or as Chris Ellison says, or not.
Mate, I've heard Quinton Burt doesn't fuck around, is the quote I've heard. Word has it he comes across as a kind old gentleman, but then in negotiations he's ruthless. So Ellison's going to have his match made out for him here. And just to your point, mate, you mentioned that they weren't getting supplied the raw materials required for this whole road to be enough. Yeah. So another stat I heard, and granted I haven't been able to verify this myself, but it was that you
need to verify.
It was that the whole road is going to handle 2% of, well, the number is up to 2% of Australia's TKMs. Total haulage, TKMs.
Yeah, wow.
So you wouldn't want to skimp out on using the cheap stuff on that.
No, especially when you're trying to sell it, but we'll sell a portion of it. But we'll get to that, because you look at this photo above. This was from article number 1 by Curry and Tomo. Chris Ellison, in his very direct look here, like he's serious. As I said, a mere 24 and a half hours later, a smiling Chris Ellison picture appears in Street Talk via 3 different journos to the first article, because it's a Street Talk one. And it was to do with first round offers are in for the 49% stake in the pit to port Onslow Hall Road, which could fetch 1 to 1.2 billion.
Yeah, absolutely. And just to put one more point on the earlier article, the key issue surrounding this is whether there's going to be a delay in first ore. So that article also touched on the point that MinRes are resolute in saying that June is the start date, and there was reference to an equity research analyst saying that it could be September, it could be a 3-month slip up there. So that's what they're trying to defend from a MinRes point of view.
Yeah, because so Ellison's best mates at JP Morgan apparently have buy-side mandates that are flying like confetti, lads. There's there is apparently one indicative bid from Morgan Stanley Infrastructure Partners. There is US $16 billion mob. So as we say, money miners, have a think why every article is an article. It's very interesting to see the very positive Hall Road article only 24 hours after a very negative article relating to the Hall Road.
It's to ease the fears, mate. You got the bankers are doing what they do best, and it's just settling the market. Nothing to worry here. We receive first round bids, all going to plan. We're still going to sell it. It's all going well, mate. Nothing to worry about here. Nothing to see here. JP Morgan on track.
Because they have the incentive to clip that ticket. So they want to make sure it's bloody being sold. Because that first article saying there's not enough gravel being put in to handle all the iron ore trucks might make those buyers think, geez, I'm going to be liable for 49% of the future repairs if this road flogs out. I'm not going to pay $1.2 billion for that. Yeah,
that's I remember in the middle of Chris's rant, he was talking about the potential of the whole road and owning some of it, and he said zero costs associated with it, zero risk, blah 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 blah. How do you have zero costs when a whole road, by definition, needs maintenance over time? Didn't understand that one. Anyway,
yeah. One other thing worth mentioning on your point of incentives there, Matty, who would want it cheaper? Morgan Stanley and their advisor, in this case, Azure. They would be one party interested in knocking down that price.
Yeah,
they are an interested buyer.
They might have been in touch for article number 1.
Ignore Sarah Thompson, etc. This is written by JP Morgan.
Yeah, but article number 1 about the gravel might have been Morgan Stanley.
It might have been.
Yeah, I love it. I love this bloody shit. Now, if Bert do not return to the job and MinRes are still short of contracting capability, to get this haul, because this haul road needs to get done in time. It's a massive risk towards it. The Onslow Iron Ore is starting before the haul road is finished. There is an interim solution by the sounds, but to get the full ramp up, they need that haul road bloody flowing. So Mr. Ellison, I'd recommend calling Seamus Murphy to get his new venture, Australian Earth Moving and Haulage, to come up and finish the job if Bert don't return.
You make a good point. They've got their hands full starting an airline. They don't want to be, starting a new business. I would probably
don't spread yourself too thin.
Seamus, on the other hand, got this sorted.
He'll find extra gravel. He's like, mate, there's nothing that man can't do. We've already seen what he's done in the exploration industry with Anytime. Now he's also expanded. Mate, he's got. You want to know about bloody dozers, JD? Fucking a D5, a D5, a D6 and a D8, mate, 25 and 35 ton excavators, rock breakers, trucks, trailers, dollies, bloody everything, anything you need in mining, exploration and civil earthworks, in addition to anything in just exploration in general with the people, the equipment, the core cutting, the soil sampling, and once you've friggin' done all that, you can get any time to do your mineral resource estimate for you as well with their in-house geology team. Fuck me dead. Go Seamus Murphy. What a bloody legend. What a business. Love what they do.
Mate, he's got no shortage of bad gravel. You're 100% right. He'll get the good gravel.
And shitloads of it. Top quality. Right. Deep yellow. Capital raising. Well, the short has nailed it. You didn't need to be a rocket scientist to figure out that to raise money to fund this Tumas uranium project in Namibia.
I'm not sure the short has nailed it because this thing definitely got short squeezed. So, and you don't, just because it went down sort of over the last month. I mean, this thing was heavily short in the back end of last year and it just ripped. So short.
But it's really increased in the...
Yeah. Depending on your time frame of being short you nailed it. But I don't think it's as simple as,
the ones that come in lately after when it was at that peak, because obviously uranium price has gone down a bit as well. Yeah. Couple that with this. So they've... Yes.
Some of those, because there was the big rumor that they were about to pull the trigger on a raise at the end of last year, and then they just stopped and halted, and then the short interest rose as the expectation the big raise was coming, and then that squeeze dynamic really played out.
Well, they were doing a non-deal roadshow in January of this year, and then the Fin wrote an article questioning, do you need to raise capital?
Yeah.
And ended up cancelling the roadshow, and here we are 6 weeks later, they're issuing 25, an expansion of 25% odd on the shares on issue that they've got. So pretty chunky raising they're doing. Matty, do you want to run through the details on how much it is?
Well, 200
raise discount as well. So if you were short, it's not like you really got paid.
Yeah, they'd be banking on if coming in on the short when the uranium was sitting at $106 a pound.
Yeah.
And it's retreated to 93. So 2 tranche placement, JD. Tranche 1's their placement capacity. Then tranche 2, I think it's, what is it, 140 and 100, it's 80, 140 in tranche 1 and 80 in tranche 2, and then plus another 30 mil share purchase plan as well. So that 80 is the one that needs shareholder approval. Issued at a price of $1.22.5. Mate, will they be get in the ETFs? It's the playbook, JD.
It's the age-old playbook for these uranium companies. Now, obviously, they had to raise the capital, like you said, Matty, to build the project in Namibia. So US 360 million capex there, but that's not all of it. Clearly, there's another 51 million that needs to go toward pre-production OPEX, and they were both in US dollar terms. So all up Aussie, about 625 needed to build the project there. So it's pretty hefty.
Yeah, so what they're raising, and we'll go through it later, they're looking to be about 60 to 70% debt funded. So add the debt, what they're raising here, bit of working capital left over. So, right, highlights from the presentation, boys. They had a bit of a webcast hosted by Bell Potter today. Mate, nothing like having the baby kisser Johnny Borshoff in there live. Love it.
It was a cracker. Why don't we start with his comments on the uranium market in general, on the sort of supply shortage?
Right time. The uranium backdrop is excellent for opportunities, both not only sort of exploiting what we've already discovered, but what I call this post-Fukushima supply reconstruction era, which not many people talk about.
Can you believe that? Not many people talking about this? That one doesn't pass the test for me, John.
I think it's been in every YouTube video about uranium.
Yeah, I think I've heard a thing or two about a uranium supply shortage. And there was a bit of a Freudian slip later on. Why don't we play that now?
When you marry that with the debt financing, we believe that'll take us to the developing Langerhans, developing the Tumas project.
Old habits, hey, they die pretty hard. So
maybe potential M&A there, JD. Maybe Paladin's going to take over Deep Yellow.
Oh, he wouldn't take this. He wouldn't take second fiddle, mate.
Maybe it might be a Silver Lake Red.
Yeah,
Silver Lake Red setup.
Oh, jeez.
The fish that eats the whale or something like that, hey?
Yeah.
So why don't we get into the DFS? They sent out an updated DFS in December. We touched on the numbers there before, Matty, that sort of 625 million total for pre-production capital. So post this raising, they'll have 280 million Aussie. Now, 30 of that is going to their Australian project. And by Q3 of this year, they want to secure project finance as well as make final investment decisions. So John elaborated a bit more on that, saying that they'd want to first use the equity capital that they have and then start drawing down on the debt financing in Q1 or Q2 of calendar year 2025.
Just on that one, sorry, JD. I reckon it. I heard him say that this is the final raise and the rest is going to be debt, but I find that pretty hard to believe. A
lot of fucking debt.
It's a lot, mate. It's a lot of debt.
Over $500 million.
And it's like this. Is this the sort of asset that lasts throughout a full uranium cycle? The answer is like no. It's not a Q1 cost curve asset. So like a bank financier wants margin through the cycle in order to be able to provide shitloads of gearing. To get 70% debt finance, I'd find it pretty hard to believe, especially considering he also made the quote that he only wanted 25% of supply contracted in order to facilitate that debt. I'd find that unlikely to be achievable.
Yeah, and with that much debt and, getting 25% contracted, but if it is higher, comes ceilings on the contracts. But he did talk about, he was hard on the point that, we're in the seller's market now. We're not in the buyer's market like before, and it's all going to change. But yeah, we'll have to wait and see if that actually happens.
I've got a couple snippets to play on both your points there, Trav, and Matty. Firstly, on the debt sort of financing and how that that portion came about. So let's play this one first up on how John responded to the quantum of debt needed.
And how much is the bank financing expected to be?
I'm not going to say anything, but a bit between 70%. That's flexible. We will work that out in terms of how much debt and things we want.
So he clearly didn't want to say too much, but ended up revealing quite a bit in sort of terms of percentages. And obviously that leads to what you said, Trav, in maybe us being a bit suspect in this being the last capital raise needed. Just going off the numbers he provided, 250 million being the equity portion, 30% implies 580 odd million in debt. That is very chunky. And, in contrast to the $625 million number we said needed for the pre-production capital, it's pretty big, but you got to bear in mind, obviously, that they're still a while away from construction, and then they'll have that period before positive cash flow.
I think it's pretty optimistic. I mean, he's good at talking optimistically, but if any hardcore bulls out there want to make a bet with me, happy to put my money where my mouth is and bet that either they'll do another equity raise, or it'll be a high percentage and 25% contracted. If either of those come true, I'm willing to bet 50-50 odds on that one, $1,000.
But
there we go.
But do you think the fact that it's 30 kilometres away from Langer Heinrich?
Yeah.
Does it make sense building the whole thing right there? I'll be interested to see if there's any synergies there or not.
Yeah, I'd have to dig into both and see what sort of relationship remains.
Send me your thoughts, money miners.
Matty, on your point on contracting, there was a question from Patrick from Uranium Twitter.
Mate, how good was that? The first time
I like this guy.
Someone introduced himself. It's from Twitter, from Uranium Twitter. That was awesome. Yeah. On a webcast.
I think it was on the...
Yeah, that was me, John. Patrick here from Uranium Twitter. So, yeah, if you can let us know a little bit about contracting, any discussions you've had, that sort of thing, that'd be really great. Thanks.
Well, I can easily say we have had no discussions. There's no need to have any discussions until the utilities realise the predicament that is happening.
So there you go. And John was queried further on in the call about, how they would think about contracting once already producing. And this is when Borshoff really started to get into his flow. It was really starting to get juicy. So I'll play this snippet for the money miners.
Basically, we might, sort of for 5 years tie up 25%. Of our product for underpinning the debt financing, and the rest until there's some stability. One could do it many ways. Do a spot derived market related contract, and as things settle in, you come into the more traditional sort of contract. But nobody, these people that thought, I'm going to go in first because there's a limited market share and bullshit like that, and God damn it, before their very bloody eyes, in 9 months, people are saying we've got a triple nuclear. There's no
John,
need.
Sorry,
anyway.
I just think we might just keep moving on and give up other people on the opportunity to ask some questions if they would like to.
Good on you. Yeah.
No, I might just ask one if I can. John, you're obviously involved in the development of Langer Heinrich Tumus's own.
There you go, gents. That had a bit of Ellison to it. I was pretty disappointed that the call host cut him off there. It was really
don't cut off Johnny Borshoff. That is the #1 rule in uranium. You don't cut off Johnny Borshoff.
It gets worse, mate. James Unger, pull your fucking head in. You can't cut him off mid-rant to let others ask a question, but the only other question comes from you.
Yeah.
No one else had a fucking question. Pull your head in, mate.
Go. We would have learned a lot there. And I hate, and we saw it the other week in the Orabanda one. I hated if the hosts are asking the questions.
Mediator.
Oh, yeah. There was planted questions from other people that work at the broker. Yeah.
That bloody annoys me.
Yeah.
Yeah, all up, that was a very entertaining call, gents. And to what you guys said earlier, I'm not so confident with regards to their strategy on contracting and whether a debt financier would be comfortable at all with that much capital going toward it and not wanting to lock in a fair bit. So let's watch this space.
I'll be oh mate, I've got that I got me M&A eyes on this. Oh, bloody trust me. What else going on? What do we got? We got a bet at bloody SolGold. Capped at 230 million pounds, 450 Aussie bucks. JD, what's happening with SolGold?
Alrighty, so SolGold, they've been on a bit ride down in terms of the stock price recently. They're a funky one, as you guys know. They're TSX and LSE listed, but headquartered in Brisbane, and they've got, board members and whatnot in just about every time zone on the planet, which makes things complicated. So we spoke about them not too long ago with regard to that boardroom dynamics and a bit of fighting and a bit of legal action between people that have since departed. And we also spoke about their, infuriating decision from the point of a potential acquirer to put on a royalty agreement. So as a quick reminder, they've got BHP, they've got now Newmont, previously Newcrest, DGR and Jiangxi all on the register with pretty substantial stakes.
So that the new DFS come out, that was recently, wasn't it, JD?
Yeah, that was pretty recent. It was an update. They were really looking to drive down the capex, and they did an all right job at that with a few sacrifices. So they got the capex down from their April 22 study to the most recent Feb 24 study from 2.7 billion US to 1.55 billion. So it's a big underground block cave, mining method that they're deciding to go with, and what goes with that is a lot of dollars into the ground to get it up to decent scale. They want to start at 12 million tonnes per annum up to 24. So very, very chunky. And given that sort of complexity and price tag, it's been long thought in the market that these guys wouldn't be the ones that actually develop it, but it sort of goes hand in hand with the royalty and other things that a acquirer hasn't quite emerged just yet.
Yeah, I read through that DFS, JD, and look, just the biggest concerning part to me about the comments about reducing capex is there wasn't one mention of getting a SMEC VSD installed for the vent system. Did you notice that too?
It was I did Control F for SMEC.
Yeah,
no, nothing.
And
Control F VSD. Nothing.
I nearly put a line through it.
Worse than the royalty was the decision to not include the SMEC VSD, mate.
Yeah.
Well, it's just a bit funny if you're trying to get down the capex and you're not calling up SMEC. It just doesn't, I can't put two and two together there.
Yeah, like just the OPEX and the OPEX, like another way to just save money is get that OPEX down. Like the companies like this need to wake up and smell the roses, because there's nothing rosier than saving an absolute shit ton of power by using a SMEC variable speed drive for your vent system, coupled with the SMEC Fen on demand to drop your ventilation power usage in the secondary scene by up to 50%.
SolGold,
far out. How hard is it?
Do you hate higher IRRs? Do you hate bigger NPVs?
Do you hate saving money?
I mean, Jesus Christ.
The mining companies out there that do not have a SMEC VSD right now, they must hate money. They must just want to give it away. Like, why keep it, mate? Interest rates are bloody high compared to what they were a year or two ago. If that's in the bank, you're saving money and you're getting interest. SMEC handed it to you on a platter. Mate, take action and get a SMEC VSD. And, mate, get every blue box known to man that SMEC makes for everything electrical underground. SolGold, get your ducks in a row and give Marty Law at SMEC a call.
Well said, Matty. Well said. If they're willing to give away,
just infuriates me. Anyway, don't know if I'm interested now, but today's news, JD, what come out of SolGold?
All righty. So this one was it was pretty mistakenly reported in a few media outlets. They were sort of implying that the Ecuadorian government wanted to invest over $3 billion in the project, which isn't the case. They're essentially safeguarding a future investment from the company SolGold. So they've signed an agreement at PDAC. They did it there to make a big song and dance of it, like everyone does at these mining conferences. They haven't really signed the definitive agreement yet. That's going to be signed in Ecuador in the near term, but it is a complementary investment protection agreement to protect, with the previous agreement now up to US $3.5 billion. So you can essentially think of what's gone on at Cobre Panama, if you want to a good analogy. The government is trying to give confidence to the company and investors that the money is guaranteed, the money or investments won't be taken off them. And, especially for SolGold, permitting, community approval, and getting financing have been the big overhangs on the company. And that's one of the reasons why the stock price has been trailing down for the last year. So it goes a bit of a way to check in that first box, getting government approval. It's quite a good announcement. And, I've made the analogy there with Panama. Ecuador is slightly different. They've got two pretty sizable projects in Mirador and Fruta del Norte already in country, but it is something in these sorts of jurisdictions that investors are very cognizant of and want to be safeguarded against. And, further to the point of investment in Ecuador, I'm not sure if you guys saw this, but Gina announced over the weekend that she's looking to put $120 million US into the ground in Ecuador across 6 different projects. I didn't read too much into it, but it was a decent headline.
She's such a patriot. She loves Australia, but this is a bit weird.
Yeah, it's a bit out of left field for Gina. And just to finish up on SolGold, I noted that they finished 2023 with about $12 million. Now, I suspect this is quite a bit lower given the ongoing costs that they've got. And I also noticed there's a bit of new brokerage coverage going on, in the very recent past. And I can't help but think with that low cash balance, new brokers picking up coverage, and the stock ticking up 20% today on the news, that there is a capital raise imminent.
Yeah, Brisbane headquarters I've got a funny quote coming out in our interview tomorrow about mining companies who have a corporate address in Brisbane, but they're not a Queensland copper player.
I think you said that on Monday as well, mate.
Or the Gold Coast. Gold Coast, that's a concerning one. Right, lads. But gold M&A is coming back, I reckon. Ramelius went into a trading halt midway through today. In relation to media speculation, they are about to announce they are acquiring Karora.
Mate, this is very interesting. Gold M&A it's here. We're seeing the consolidation. Silver Lake Red, and now we've got Ramelius. They're in a trading halt, and it looks like it was a pretty damn leaky ship before that trading halt, because look what happened to their share price right before they halted, mate. Look at that. Look at those red candlesticks, Matty. What does that look like?
Look at the gap.
Look at the volume. That looks like an information leak to me if I ever saw one in the share price. But look,
very suspect.
Yeah, very suspect. Hence they halted. And look, right, there's not too much to work on to talk about the story at the time of recording. But let's think about the logic of this one right now. Ramelius merging with Karora. To start with, are there synergies? And Ramelius, of course, they've got 2 processing facilities right now, being Mount Magnet and also Edna May. Both of those centres have relatively short reserves life from the various mines that are feeding those facilities. Ramelius, of course, acquired Apollo and Breaker in the past few years, giving them the Rebecca and Roe projects respectively. And their resources are in the eastern goldfields, but they have no processing facility to put that through. We've talked many times that I'm sure they'd love to be able to put it through Carosue Dam, but Northern Star seem pretty unwilling to part ways with that, given the near-term cash flow that asset is producing for them. And so on this map here, you can see all of those projects for Ramelius, but I've also drawn on, just in those little red dots, those are the 2 processing facilities that Karora has, being Higginsville's 1.6 million tonne per annum plant and the Lakewood 1 million tonne per annum mill as well there, which they picked up just a bit over a year ago, I think. And the shining jewel for Karora is their Beta Hunt mine, where they've had some really great exploration success in recent times. They've discovered a bunch of new high-grade zones, which has really elevated them to the next level. Because
Beta Hunt was a nickel mine, but there was always there. I remember when the news article come out, this airlegger come across this frickin' blasted this one of his airleg drives, or it was an airleg drive, I think, and just went in to re-enter it, and there is just frickin' gold everywhere, just the whole, these big rocks just full of visible gold, beyond anything you would ever see. So there's all these pockets. So it's been converted, a nickel mine that's been converted into a gold mine, just a weird anomaly that is at Beta Hunt.
Yeah. And as you can see on that butchered map there, Matty, it's not like, Beta Hunt and the 2 mills, it's not like there are like actual synergies, regional synergies abundant there. I mean, like you look at Rebecca and Roe, which are the stranded projects for Ramelius, and I don't think they can be trucked to the Lakewood mill, which is the closest mill. I mean, Rebecca's 1.3 grams per tonne, Roe is 1.6 grams per tonne. Are you really going to, unlock a whole bunch of synergies by trucking that? Like that's not good. Like it's too far away. I'm pretty sure that's too far away. So,
unless they're looking for other projects around that area as well to fit into it, like who knows?
Yeah.
Got like Astral have got their pit down that way. That's sort of they were hoping to tie in with the St. Ives mill, but
yeah,
don't know.
If you just look at these two entities and say, are there regional synergies?
Right now,
I think the answer is no, right? And
so it's whether they're going to look to go again.
And so what's the real rationale? Why would you really like what drives a deal in this instance, right? And I think it's as simple as the fact that Ramelius' production falls off a cliff when Penny's mine life ends, and the script today is valued like that isn't going to happen. And look, like the company's always been active in M&A, and they've replenished their reserves kind of successfully doing just that. But it's got more than just a growth problem when Penny runs out, because it's running out fast. And in fact, I think it's going to be gone as soon as FY26 by my math, depending on how fast you mine it. But when you look at Penny, and it's like it's a giant sugar hit for them. There's 320,000 ounces there at 22 grams per tonne. That's insane grade. So it prints cash, but it runs out so fast. And so how do you replenish those ounces when the market cap is happy to ascribe a $1.8 billion valuation to Ramelius today? Well, you use that overpriced script and you buy your way out of the production cliff that they're staring at. And on Karora's side, what's the deal rationale? Why would they want to do a deal? Well, I think there's two things that would be attractive to them. One is, they've reportedly wanted an ASX listing for a while because they want to be valued like the Aussie gold producers. I'm not sure where the discrepancy is on the relative valuations these days. And the other one is it's a pretty speedy way to get your ASX listing. But the other point there is, heck, Ramelius might even pay, if they're willing to pay a pretty healthy premium. In addition to that, then you get valued as if you get your re-rate immediately instead of having to wait for the market to re-rate you. So let's wait and see what the actual deal rationale is pitched to investors at when the transaction deck ultimately surfaces. If it does, it's just a rumor at this stage. But based on what we have right now, it looks to me like a deal that, even though there are no regional synergies, like I actually do think it makes sense, just because two motivations can be met. It does make sense for Ramelius to use overpriced script. If they think they're fucking overvalued, well, I'd be using that script as well. You know what I mean? Like,
yeah, you never. That's why they get the best M&As, the stuff you never see coming. They're a lot smarter than us. Yeah, right. Spartan, Trav. What's drawn your attention here? I didn't see any exploration results today.
Mate, I always open the change of director interest announcements when I see them, because you never know what you might read in those. And one of these went up for Spartan Resources today, and it was linked to a friend of the show, Mr. Hans-Georg Plagemes. I don't know if I'm saying his name right, but I'm just
Hans.
I'm going to call him Mr. Plagemes from now on. And I think we still got to do a ding, ding, ding on this one, JD. You're a shareholder, right?
Oh yeah, that's right.
So, Mr.
Unlucky you for today,
Mr. Plagemes.
No, this was a very, very sloppy transaction, and I'm sure you're going to get into it in a good way. But straight away pulling up a report and seeing a director selling 1.2 million, that draws a few more questions, and I think we've got a couple answers to those ones, don't we,
mate? We might be raising more questions, but I want answers. So, Mr. Plagemes is of course the representative on the board of Spartan for Delphi. And well, look, Delphi, they sold 2.2 million shares of Spartan for $1.2 million on Monday, the 4th of March, or Monday this week, for roughly 55 cents each. Monday, of course, is the same day that Spartan stock shot up 12% on the results that came out with gold extending as deep as 1 kilometre, they reported. But
1 kilometre down dip.
Down dip, yeah, not vertical. Yeah. Don't let that ruin a good headline, mate.
Yeah.
But there's a problem. And that is Spartan is in a closed period for the purposes of trading its securities. That means directors and employees are not allowed to transact the shares in this period. And look, this is standard for the 4 weeks prior to the release of half-year financial results for public companies. In fact, it is explicit in Spartan's own securities trading policy, approved by the board in just December gone. You can see it right there. I've highlighted it for you. It says in the 4 weeks prior to the release of the company's half-year results, you're not allowed to bloody, it's a closed period. So what was Mr. Plagemar's excuse for this pathetic oversight in simple corporate governance? Well, I reckon it's worth reading it out because it's disclosed within this, with what was lodged on the ASX today. Were the interest in the securities or contracts detailed above traded during a closed period? Response is yes. And now let's look at the bloody response here. Was written clearance provided? And they've said no. Delphi, which they abbreviate it as DU, submitted an order to its broker on the 29th of November to sell the shares prior to Mr. Plagemar's being appointed to the management board of DB on the 21st of December 2023. Mr. Plagemar's was not aware of the sale order until after the shares were sold, at which point he notified the company. And then it says the lack of prior written clearance was an inadvertent error as a result of Mr. Plagemar's recent appointment to the management board of DU, noting that he was not involved in or aware of the prior order to sell the shares and has meanwhile put systems in place at DU to avoid such an error in the future. The company considers this to be an isolated incident.
Oh, right.
Mate, so let's get this straight, right? Delphi submitted a sell trade over 3 months ago and the broker just left it in the system and it was only just triggered. Does that sound reasonable to you? I'll tell you why I don't think it's reasonable. I'll sense check it with some math. They sold exactly 2.2 million shares for $1,210,000 and $788. Divide the consideration there by the shares, and it's not a perfect 55 cents that the shares were sold for. It's a bloody uneven number, and the only way you get an uneven number is if it wasn't just like one sell order in the system at 55 cents just left there. You had to execute at varying price points for that to happen. So like put the arithmetic argument aside and let's just assess the reasonableness of the defense here. He says he only just became director of the management board of DU on the 21st of December, hence he didn't know about it. And to be clear, DU is one of a group of companies that come up with this German shareholder over and over again. There are a bunch of affiliated entities and they pop up together when there's a change of substantial notice for Delphi. And that's because these entities are associates. Mr. Plagemar's remained a director of some of those other associates before the 21st of December. And look, there's a change of substantial. They all pop up together. And in fact, Gascoigne even, well, this is Spartan, but also known as Gascoigne, they even confirm that all of these associate entities pertain to DU. In this quote here from their recap last year, says DU and its associates, Deutsche Balaton AG, Sparta AG, and To Invest AG, in their own words, they're all associates. So if you can't tell, I think it's a complete crock of shit, and I find it appalling. In my opinion, it's simply not good enough to say it was an error. I didn't know the trade was there from 3 months ago. Read Spartan's own security trading policy on this one, right? It says, director and senior management dealing in securities includes associates of directors, executives dealing in securities, and it is incumbent on each director/senior management to ensure that an associate does not deal in circumstances where that dealing could be attributed to the director/senior management concerned. It includes associates.
Pretty explicit.
It's your own responsibility to know, Mr. Plagemar's. I'll tell you why I think this shit happens, and it's because you get away with it all the time. You say, I'm sorry, it was a mistake, and nothing happens further. And in my opinion, that is an absolute fucking joke. You should lose your job if you do this. If it was a mine site, Matty, and an administrative oversight led to the tragic loss of life, for example, like the worst possible thing that could happen on a mine site, but it was an administrative oversight, it's not good enough to say, well, I wasn't a director of that specific associated company at that point in time. Yet you see this shit all the time on junior ASX mining stocks, and it's a giant load of shit. You are not fit to be a public company director if you breach simple security trading policy of the own company of which you are on the board of directors for. You should lose your job if you do that. It is like the most basic rules to follow, which you approved yourself, you broke. And yet, unfortunately, it rarely happens that you lose your job for doing so. Because what you find is these boards are so ancestral. I'll scratch your back if you scratch mine. I won't fire you from your job if because you're gonna vote with me on this thing or whatever it is, right? There's this ancestral nature of all of these board directors, and they're on various borids together, and it's sickening.
You're talking about him and
not even necessarily
Rowan Johnson.
I'm talking generically now, right? Like refer to our conversation with Rusty, the first one that we had, and these board members, they rarely do what they're supposed to do, which is act in the interest of shareholders. Consider this a message directly to the rest of Spartan's board from me to Simon Lawson, to Rowan Johnson, to David Coyne, to John Hodder. You're going to scratch someone's back here, or are you going to do what you're supposed to do as a board and show good governance in response to evidence of deplorable corporate behaviour according to your own policies? I'm not going to hold my breath.
We'll wait and see what happens there.
That was a good one.
Might be the last we just hear about it. You might have the last say on this, but hence the problem. Right.
No, I think you're bang on. It's about time there was some sort of changes around this, and the point you honed in on at the end there, Trav, about what the role of the board is super, super important, and it doesn't even feel like it's a part of the conversation most of the time. So I think you're bang on.
Right. Cyprium boys, what is going on here?
Mate, this is, I'm sorry, I'm just getting my breath back.
Just funny going. You got a jumper on too. You'd be sweating like a bloody...
the aircon's cracked up in here. Shout out to Chucky, who pointed out that this is a slide you'll rarely see in investor presentations. It's just a good chuckle, this one. But it says Cyprium has disappointed shareholders so far, with the share price going down, and like some very honest truths about the ways in which this company has disappointed shareholders. I won't read them all out, but I found it quite funny.
Oh, bloody a bit of honesty. Now that's the honesty we want to see.
Yeah, it's no indication that they're going to stop disappointing shareholders.
At least they're honest.
But they've just had a leadership change last week. That's only a slide you're going to see when a new boss is 1 week into the job.
Very true. Very true.
Wipe that slate clean. Oh, I love that. Trav, buddy, go. You need to, I'll take you for a walk later. Give you a run around in the park. Righto, thanks to all our bloody great partners for making money of mine possible. VRIFY, GetWet, DSI Underground, SMEC Power and Technology, Anytime Exploration, KCA, Brooks Airways and K-Drill. Good work, boys. See you tomorrow.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.